We begin, though, with our talk of the tape, the fate of this market. The rally, at least, taking a pause today after that big burst yesterday, that post-Powell pop, if you will. Let's ask Altimeter Capital founder and CEO Brad Gerstner what's likely to happen now. He is with us today exclusively right here in Overtime. Welcome back. It's good to see you again.
Great to be here, Scott. Thanks for having me.
You were last on September 15th. I mean, S&P's up 3.5% since then, and a lot has happened in that period. Obviously, we're up a lot from the mid-October low, but you described the market environment back then, Brad, as, quote, pretty treacherous. So how would you characterize it today?
Well, listen, we've gone through a historical regime change for sure in 2022, and everybody has to reorient themselves around a rate environment which is going to be 4 to 5%. What made the world treacherous for growth stocks in September was that they weren't pricing this new orientation. And so what we've seen since that period of time is great dispersion. For those companies that are driving free cash flow growth, we're seeing a great response out of the market, right? Think Palo Alto Networks or maybe even Snowflake today. For those companies that are still anchored to this idea that they're going to get a multiple of revenue, right? 10, 15, 20 times sales without producing profitability. That ship has sailed. Those days are gone. And the faster both private and public companies get on board with this new orientation, I think the better they're going to perform.
You're so transparent with us every time you come on in terms of not only how you see things, but how you're positioning, right? Where you're putting your money to work. Can you give us an idea today where you're positioned?
Well, I'll tell you, I've been uncomfortably long over the course of this year, and we've been long and wrong for many parts of the year, right? We didn't anticipate that inflation was going to be this persistent. We didn't anticipate that rates were going to go this high. And the fact of the matter is that's been painful for us and for a lot of technology investors. But here we are starting December of 2022, and we're looking forward at a year. We listened to the Powell speech yesterday. I think there's a broad consensus that inflation is rolling over. I think there's a broad consensus that now we have an upward bound around rates. I don't know exactly what that is. Maybe it's a Fed funds rate of 4.5, of 5, or 5.25. But that gives us something to hinge to as we begin to model and underwrite investments heading into next year. So I think that you can either fight the last battle, which will be pretty painful, right, or orient and position your portfolio for 2023. I think the things that you want to own, to the extent you're going to be investing in technology, need to be those beaten up names with real free cash flow support. There are big cap names trading at historical lows. There are companies like Snowflake today where this company over the course of a year has gone from trading at 100 times sales to 40 to 50 times free cash flow, right? Free cash flow. And that's why the company, they came out last night, they said, listen, the macro's tough. Fourth quarter is going to come in a little bit lighter. In most instances, that would have been abused by 20%. In fact, it was down a lot after the bell, as you know, yesterday. However, the stock ended today up almost 8%. And the reason is they give a free cash flow guide for next year that came in at $700 million versus the estimate of $550 million. Not only is this one of the fastest growing software companies of all time, but it's one of the most profitable fast growth software companies of all time.